Okay, so let's continue from where we left. Let's continue from where we left. Last time we were discussing how to prepare a cash flow statement for the group. That's what we were discussing last time. And you remember we had finished our discussion. On how to account. Listen, on how to account for an associate and how to account for the non-controlling interest in the cash flow statement. We had discussed those two areas. When you are doing a group cash flow statement, how do you account for an associate? How do you account for the non-controlling interest as far as group cash flow is concerned? So those two, we had discussed them. The third area I talked about, or I told you, you will be required to know concerning cash flow questions for the group, is this area we are calling acquisition and disposal of subsidiary during the year. How do you account for acquisition and disposal of subsidiary during the year? That's what I want to talk about now. That's what I want to talk about. Now, listen carefully. I told you, whenever the examiner gives you a question, just a minute. Yes, it has started. Dennis and Kia, Doris at the class has started. Somebody to write for her to click on the link. Somebody write to her, write in the group, click on the link. Tell her to click on the link. It will join the class. She will join the class. Somebody write to her, write in the group. Okay, so let's continue. So I was saying this. Every time you are given a question on cash flow, whether it was financial accounting question or financial reporting question, I have told you in the past that you are always given an income statement for that year and two balance sheets. One balance sheet for last year and another one for this year. Listen carefully now. Let me assume that our current year is 2022. So you will be given the balance sheet for 2021 and a balance sheet for 2022. Now listen, we want to look at how do you deal, listen now, how do you deal with acquisition or disposal of a subsidiary during the year. Now listen, I'm starting now. Assuming as a holding company, you acquired a subsidiary. Listen, you acquired a subsidiary company somewhere on 1st July 2022. That's when you acquired your subsidiary, on 1st July 2022. What does it mean? It means that the balance sheet the examiner will give you for last year, 2021, that year we did not have a subsidiary. So that balance sheet must be for the holding company only. Then we acquired a subsidiary on 1st July 2022. So by December, when we were consolidating, then it means the balance sheet I'm given by the end of the year is the one that includes the holding and subsidiary. Good. But my concern is this now. When you acquired this subsidiary company during the year, on the date you acquired that subsidiary company, on 1st July, on the date you acquired them, the following, listen, the following were the net assets of our subsidiary. One, they had stocks, maybe amounting to 5 million. The subsidiary had debtors amounting to 3 million. Maybe they had machinery amounting to 5 million. Maybe they had creditors amounting to 3 million. Creditors is a liability. We normally put it in bracket. And cash, maybe another 2 million. Good. Listen. So those could be the net assets of the subsidiary at the date of acquisition. At the date of acquisition. When we acquired the subsidiary company, that subsidiary company came into the group with those bunch of net assets. Now listen. In our cash flow statement, especially for the indirect method, in our cash flow statement, especially for the indirect method, we have been saying increase or decrease in stocks, increase or decrease in cash, and so on. For example, if the stocks as per the balance sheet last year were 10 million, according to the balance sheet last year, let me assume there were 10 million, and the stocks by end of this year are given to you as maybe 18 million, would you conclude, listen carefully, would you conclude that in your cash flow statement that the stocks were increasing by 8 million? No. Listen, no. It's true if you are doing a financial reporting of section 1, financial accounting, cash flow, or financial reporting of section 3, which is financial reporting, it's true. The stocks were increasing by 8 million. From last year, I can see stocks were 10. This year, the stocks are 18. So our stocks must have increased by 8 million. That is, listen, that is if we did not acquire a subsidiary company during the year. If we did not acquire a subsidiary company during the year. But now, here we acquired a subsidiary company during the year. And that subsidiary company that we acquired, it came into the group. Listen, it came into the group with its own bunch of stocks amounting to 5 million. So we want to talk about, that is the subtopic now. What is the effect of acquiring or disposing a subsidiary during the year? How does it affect our cash flow preparation? When you acquire or dispose a subsidiary company during the year, this subsidiary that you are acquiring will automatically come into the group with its own bunch of net assets. How will those affect the preparation of the cash flow? That's what I want to talk about now. Good. Before I talk about that, listen, today is a free class. Today is a free class again. So there could be some students who have joined us and they are joining us for the first time. Now listen, I'm talking to you. If you are a new student and you have joined us for the first time, please remember to subscribe. I am pleading, please subscribe to my YouTube channel so that you can get notifications whenever we post videos in our YouTube channel. So please subscribe. You can click that subscription button down there. Even right now, as we are watching this video, you can click that subscription button if you have not subscribed, so that you can be notified anytime we are posting new videos into our channel. So please subscribe by clicking that subscription button. You can even click the notification bell. Good. So that's one information for the new students. Next, still for the new students, before we continue, listen. Sometimes you may be disconnected. Sometimes you may be disconnected because of your Wi-Fi strength being weak. If you are disconnected because of your Wi-Fi strength being weak, how can you rejoin the class. How can you rejoin the class? There are two ways in which you can rejoin the class. Listen, sometimes you may click on the disconnected video. You may click on the disconnected video and it doesn't take you back to class. So how else can you come back to class? To come back to class, you can refresh your page. On the top left or on the top right of the page from which you are watching the video from, there is always a refresh button. There is always a refresh button. Click on that button and you refresh your page. That will bring you back to class. If your gadget does not have a refresh button, then you go back to the group where you received the link from and you click on the link and that will bring you back to class. Good. So I think I've talked about the new students who have just joined us for today for the first time. Maybe it's your first time you are joining us. Then I've told you, please subscribe. And in case you are disconnected, how do you rejoin the class? How do you rejoin the class? Okay, now let's go back. Let's go back now. So I am discussing the effect of acquiring a subsidiary during the year. For example, I've just said, in normal circumstances, I would have compared the stocks last year with the stocks by end of this year, and that would give me what we call either an increase or a decrease in stocks. But here is a case: we acquired a subsidiary company on 1st July, and it came into the group with its own bunch of stocks amounting to 5 million. Listen, therefore, for you to know whether there was an increase or decrease in stocks for the group, we shall be preparing that stock account. We shall be preparing the stock account. Bring down the stocks by the beginning of the year, which according to my illustration was 10 million. Then you come and say, when we acquired this subsidiary company, it came into the group. It came into the group with its own bunch of stocks amounting to 5 million. That 5 million will automatically, will automatically make the stocks of the group to go up. So you will come and say here, you will add, and come and say subsidiary acquired that 5 million. Then you will carry down the balance by the end of the year according to the balance sheet by end of this year, which is 18 million. Now, once you do that, there will be a balancing figure in this account. And that balancing figure will either be the increase or decrease in stocks that you use in your cash flow statement. Like in this case now, I can see there's a difference. I can see there's a difference on this side of 3 million. And that looks like an increase in cash, an increase in stocks. Good. So when you will be preparing your cash flow statement, you will take 3 million to represent the increase in stocks. The same thing, let's assume debtors also. Last year, your debtors were 5 million. By end of this year, your debtors are maybe 4 million. Does it mean that there was a decrease in debtors amounting to 1 million? No. Why? Again, it's because we acquired a subsidiary company and it came into the group. It came into the group with its own bunch of debtors. So for you to know whether there was an increase or decrease in debtors, again, you will be required to open a debtors account. You will be required to open a debtors account. You will bring down the balance by the beginning, whatever it was last year, which from my illustration here is 5 million. Then you go and find out from the additional information, what is it that happened? We acquired a subsidiary during the year. That subsidiary again came into the group with its own bunch of debtors amounting to 3 million. We come and increase, and we say your subsidiary acquired 3 million. Then you come and carry down the balance by the end of the year. Balance carry down. You go to the balance sheet by end of this year, and you realize we have a data amounting to 4 million as a group. So you carry down that 4 million. Then the balancing figure again in this account will represent either the increase or decrease in debtors. And in this case again, it looks like it's on this side and the balancing figure is on this side. That looks like 4 million. That's a decrease in debtors, and that's what you take to the cash flow statement. That's what you take to the cash flow statement. Now, let me talk about the creditors first before I talk about the machinery. Same thing again. Let me assume that the creditors last year were 8 million from the balance sheet last year. This year, the creditors were maybe an amount of maybe 2 million. So again, do you say that there was a decrease in creditors amounting to 6 million? The answer is no. The answer is no. What you will do, again, you will have to analyze the account of the creditors. So you will open the account of creditors. Creditors is a liability, so bring it down on the credit side, balance brought down. And from the balance sheet last year, our creditors were 8 million. Good. Then you come and say, we acquired again. We acquired a subsidiary company, and according to this list, it came into the group. The subsidiary we acquired came into the group with its own bunch of creditors amounting to 3 million. Listen, it means that the creditors of the group must have gone up. We acquired a subsidiary company, it came into the group with its own bunch of creditors, and therefore the creditors of the group must have gone up. So you come and credit and you say your subsidiary acquired. The subsidiary that we acquired came into the group with a bunch of 3 million. Then you carry down the balance by the end of the year, and according to the balance sheet this year, we are carrying down creditors amounting to 2 million. Again, the balancing figure will now represent either an increase or a decrease in creditors. Either an increase or decrease in creditors. This side is 11, so that looks like a decrease on the debit side. Looks like there was a decrease in creditors amounting to how much? 11 minus 2, that is 9. That is 9. Good. That is as far as creditors are concerned. Now, for machinery, or listen, for machinery or any other fixed asset, or any other fixed asset in that list, it could be machinery, it could be motor vehicle, it could be furniture, whatever it is. Listen, how do we use it in our preparation of the cash flows? We acquired a subsidiary, and this subsidiary company came into the group with a bunch of machinery amounting to 5 million. Listen, you all know from your previous cash flow topics, whether in financial accounting or in financial reporting of section 3, normally, listen carefully now, normally, whenever you are given any question on cash flow, listen, whenever you are given any question on cash flow, you had to, listen, you had to analyze every item in the balance sheet. You had to analyze every item in the balance sheet, seeing how it will help you to prepare your cash flow statement. Anytime you are given a cash flow question, you had to analyze. Not literally putting down the workings, no. But you had to analyze every item in the balance sheet. Like for example, you had to compare the stocks last year and the stocks this year. then you had to say whether it's an increase or a decrease. You still have analyzed, but you did not need to open an account of stocks. It's only that now we are saying, because we have acquired a new subsidiary and it's coming in, open a stocks account. But in your financial accounting cash flow or financial reporting cash flow, you just compared the stocks last year and the stocks this year. You still analyzed the stocks, but you did not open an account. No. Now, there are some analysis where you need to open accounts. Listen, I've said, this is important. Every time you are given a question on cash flow, you had to analyze every item in the balance sheet to see how it will help you to prepare your cash flow statement. For example, you normally analyze the account of stocks to know whether there's an increase or decrease. Debtors, increase or decrease. Creditors, increase or decrease. You analyze the account of loan, for example, to know whether you have a loan repayment or maybe we got an additional loan. When you're analyzing the debentures, you want to know whether there was an issue of debenture or we could have repaid our debenture. When you are analyzing the share capital, you want to know, could we have issued more shares for cash during the year? That's what we are saying. So you had to analyze every item in the balance sheet. You had to analyze every item in the balance sheet, seeing how it will help you to prepare your cash flow statement. Now listen, I have already told you, some of those analysis you did not have to open an account. But now we are going back to the balance sheet, listen, and finding out last year, the machinery of the company was maybe 100 million. This year, the machinery is 40 million. Why do you normally analyze the account of machinery? Why do you have to analyze the account of machinery or furniture or motor vehicle or whatever? There are different reasons why you have to analyze that machinery. One simple reason, we shall look at them in details later, but one simple reason why you had to analyze the account of a fixed asset was to know, listen, could we have paid some cash to acquire new machinery? Could we have paid some cash to acquire new machinery, or how much is the amount paid to acquire new machinery? So you had to analyze the account of machinery. Okay? So for now, let me assume that is the purpose. That in this company, we want to know, as a company, how much did we pay to acquire new machinery? So you would open an account of your machinery account. You will go to the balance sheet last year, bring down the balance, whatever it is, then go through the question. That's what you used to do. Go through the question looking for anything, listen, looking for anything that affects machinery or a fixed asset. Could be that during the year, you revalued some of your fixed assets or machinery. Maybe you revalued them upwards. When an asset is revalued, you normally debit asset and you normally credit revaluation. So maybe you revalued your machinery upwards. During the year, maybe you disposed one of the machineries. As a company, you sold one of the machineries, you remove it. Disposal. Whatever it is. Maybe during the year, listen, your machinery lost some value through depreciation. So if they lost some value during through depreciation, you reduce the value of the machinery. Of course, depreciation charge reduces the value of the machinery. Okay, good. Then we are looking for, listen, I've told you that we are trying to find out, could this company have paid some cash to buy new machinery? That means cash paid to acquire new machinery. That's what we are looking for. So what I'm trying to say, when you are doing this financial accounting or financial reporting cash flow, you had to analyze the account of the fixed asset by whatever name. you had to prepare, listen, you had to prepare that fixed asset account. Then you had to feed in all the information. You had to feed in all the information concerning the fixed asset. And the balancing figure represented the cash paid. For example, you used to come and say your balance carry down, whatever it is. Once you did that, now you came and got here cash paid as a balancing figure, mark you. That's what you are doing. That is a normal analysis. Listen, a normal analysis you did for a section 1 question or a financial reporting question. But now, as this level, listen, at this level, we have acquired a subsidiary company during the year. Our aim as a group is to know, as a group, how much was the cash paid to acquire new machinery. We need that amount in the cash flow. But the point I'm trying to explain is, when we acquired this subsidiary company, look at this now. When we acquired this subsidiary company came into the group. It came into the group with its own bunch of machinery. It came into the group with its own bunch of machinery. When we acquired the subsidiary company, it came into the group with its own bunch of machinery amounting to 5 million. So how does it affect, listen, how does it affect the preparation of this account? Listen, with that amount that we acquired, you will now come and bring in, just like we have done for stocks, just like we have done for debtors, you will now come and say here, subsidiary acquired. This subsidiary that we acquired came into the group with its own bunch of machinery amounting to 5 million. That made the machinery of the group to go up. That made the machinery of the group to go up. And therefore, listen, that machinery that came into the group when we acquired the subsidiary company, we have to debit it in the machinery account. So that once we feed in all the information concerning the other items affecting machinery, then there will be this balancing figure. There will be this balancing figure to represent the cash paid to acquire new ones. So my point of emphasis is, how do you deal with that machinery that the subsidiary came into the group with? It could be machinery, it could be motor vehicle, it could be furniture, it could be a figure they are calling property, plant and equipment. It doesn't matter. How does it affect? I have said, listen, I have said that asset that came into the group, if it's machinery, it should be, listen, it should be debited in the machinery account, which is used in the machinery account, which is used to determine the cash paid to acquire new machinery. That's what I'm trying to say, that you debit it also in the machinery account, just like you debited stocks, just like you debited debtors. When we acquired the subsidiary, it came into the group with a bunch of stocks. It made the stocks to go up. It came into the group with a bunch of debtors. It made the debtors of the group to go up. It came into the group with a bunch of machinery. It makes the machinery of the group to go up. And therefore you debit. Good. So that is something you didn't have in financial accounting of section 1 and financial reporting of intermediate or section 3. We are introducing now acquisition of a subsidiary during the year. What is the effect of acquiring a subsidiary during the year? Good. Now, so I've talked about how to deal with that: stocks, debtors, cash, machinery, and creditors. Listen, I want to leave cash for now. Listen carefully. I want to leave the cash for now, but also now assume, listen, that we are not acquiring a subsidiary during the year now. Suppose the question tells you we are disposing a subsidiary. we are selling our shares in a subsidiary company on 1st July 2020. Listen, if we are disposing the shares in the subsidiary company, get the point? I've told you, in any question on cash flow, the examiner will give you a balance sheet for last year and a balance sheet for this year. So last year, 2021, we still had that subsidiary. So the balance sheet I'll be given for last year will be for H and S. Will be for H and S. Then come 1st July this year, 2022, we disposed our subsidiary company. That means it left the group. And that subsidiary that we disposed left the group with its own bunch of net assets. These ones, again. Meaning, again, the balance sheet we shall be given by the end of the year will only be for H only. Why? Because S is no longer a member of the group. We sold it on 1st July. So listen carefully again. When you are preparing a cash flow question, and here is a scenario where you disposed a subsidiary company during the year. For example, stocks were 10 million last year. From this balance sheet, the stocks are 18 million. Do you conclude that there was an increase in stock of 8 million? The answer is no. Again, you will be required to analyze the stocks account. You will be required to analyze that stocks account. You will prepare the stocks account. You will bring down the stocks by the beginning of the year, which we are assuming to be 10 million. Listen carefully now. Then, from your additional information, the examiner will have told you that during the year, the group sold its shares in S Limited. The following were the net assets of the subsidiary company as at the date of disposal. One of them is stocks. So this subsidiary left the group with its own bunch of stocks amounting to 5 million. So what effect did it have on the group stocks? Listen, we had stocks amounting to 10, then we disposed a subsidiary. That subsidiary left the group with its own bunch of stocks amounting to 5 million. That automatically, listen, that automatically made the stocks of the group go down. Therefore, you will come and credit this stocks account and you say your subsidiary disposed. Subsidiary disposed, the amount is 5 million. The amount is 5 million. Then you will carry down the balance by the end of the year. According to the balance sheet come the end of this year, we were carrying down stocks amounting to 18 million. We were carrying down stocks amounting to 18 million. The balancing figure again will represent either an increase or a decrease in stocks. Like in this case, we have 23 on the credit. This should also be 23. Looks like now there was an increase in stocks amounting to how much? 13. Again, if you're analyzing the data's account, you will go to the balance sheet last year, find out how much were the data's last year, 5 million. Bring it down. That is data's 5 million. Balance brought down 5 million. Then go to the additional information. You say we disposed a subsidiary. It left the group with its own bunch of datas amounting to how much? 3 million. That made the datas of the group to go down. So we reduced the datas by that 3 million. You come and say here subsidiary disposed 3 million. Then you carry down the balance by the end of the year. And from the balance sheet this year, we are carrying down datas amounting to how much? We are carrying down datas amounting to 4 million. That's what we are carrying down, 4 million. Now get the balancing figure to represent, again, either an increase or decrease in datas. The credit side is 7. This should also be 7. This time you have an increase of 2 million. Get the point? If you're analyzing creditors, if you're analyzing the account of creditors to know whether there was an increase or decrease in creditors, again, you will come and bring down the creditors by the beginning. Like from this balance sheet illustration, our creditors were how much? Our creditors were 8 million. Bring it down. Then you come and go find out from the additional information. We disposed a subsidiary company and it left the group with its own bunch of creditors amounting to how much? It left the group with its own bunch of creditors amounting to 3 million. It left the group, meaning that the creditors of the group went down. To reduce the creditors, you will go to the creditors account and now debit. So you will come and say here, subsidiary disposed. That is 3 million. Then you carry down the balance by the end of the year. According to your balance sheet, come the end of this year. And our creditors by the end of the year are 2 million. They are 2 million. Then the difference again will either be the increase or decrease. This side looks like 8 million. This should be 8 million. And therefore it looks like there was a decrease in creditors of another 3 million. Good. Hope you are getting the point. When you're analyzing the account of machinery or motor vehicle or furniture or whatever fixed asset they are calling it, listen, whatever name they are calling it, and it is a question where you disposed a subsidiary company, listen, you disposed a subsidiary company, then, listen, you want to know how much as a group did we pay to buy more machinery during the year. Cash paid to acquire new machinery. To determine that cash paid to acquire new machinery, we have already said you prepare a machinery account. We have said bring down the balance by the beginning, whatever it is. I've told you if that fixed asset was revalued, maybe upwards, go debit. If of course it was revalued downwards, you go credit. That's of course. If there was a disposal of machinery, go remove it. Then we are saying depreciation reduces the value of the machinery, go remove. Then I have told you now, listen, this time we are disposing a subsidiary. And this subsidiary that we are disposing, it is leaving the group. It is leaving the group with its own bunch of machinery amounting to 5 million. It's leaving the group with its own bunch of machinery amounting to 5 million. So this time you will come and remove it. You come and say here, subsidiary disposed. That's 5 million. Then you will carry down the balance by the end of the year. Whatever balance you are given in the balance sheet by the end of this year, then the balancing figure will automatically be again the cash paid to acquire new machinery. I hope you have understood on how to deal with the net assets of the subsidiary company at the date of acquisition or at the date of disposal. I hope you have noticed something like this, that if it's a question, listen, if it's a question of acquisition, then any assets of the subsidiary company at the date of acquisition, that asset should be debited. Listen, that asset should be debited in the respective asset account. Like if it is stocks, you can see here, we were debiting stocks. You can see it here, we were debiting the stocks account. If it is debtors that came in, we debited debtors here. If it's machinery that came in, we debited machinery here. Then, if it's a question still of acquisition, and we are disposing, we are acquiring a subsidiary, that subsidiary came into the group with a bunch of creditors or liabilities, whichever liability. I hope you have noticed that that liability should be credited in the respective liability account. It should be credited in the respective liability account. Good. Then, after I've been through with the area of acquisition, I've taken you through the area of disposal. And I hope you have noticed that in case you are disposing a subsidiary company, the asset of the subsidiary company, any asset of the subsidiary company, at the date of disposal, that asset has been credited in the respective asset account. If it is stocks, you can see it here, we credited. If it is debtors, you can see it here, we credited. Then if it's machinery, we came and said credit here. Good. Then if it's a liability, we came and debited, because liabilities are going down when you dispose a subsidiary. So we came and debited, and that is it. Good. So I hope so far you have understood those areas of how to deal with assets and liabilities. So before we continue, let's put down a summary note. Let's put down a summary note as per that subtopic. So have another subtopic, have a subtopic called acquisition. That's the area we are dealing with. Last time we finished the subsidiary, associate, and non-controlling. So today we are starting with acquisition and disposal. Put it as a subheading, acquisition and disposal of subsidiary during the year. Acquisition and disposal of subsidiary during the year. Acquisition and disposal of subsidiary during the year. Then you say this. Then you say this. Any assets of the subsidiary company, at the date of acquisition, any assets of the subsidiary company at the date of acquisition should be debited in the respective asset account. Should be debited in the respective asset account. And any liability of the subsidiary company at the date of acquisition, and any liability of the subsidiary company at the date of acquisition should be credited in the respective liability account. Should be credited in the respective liability account. For instance, put down this, for instance, the amount of debtors of the subsidiary company, at the date of acquisition, the amount of debtors of the subsidiary company at the date of acquisition should be debited in the debtors account. For example, we have said any debtors of the subsidiary company at the date of acquisition should be debited in the debtors account, which is used to determine either an increase or decrease, in debtors. Should be debited in the debtors account, which is used to determine either an increase or decrease in debtors. Continue. Continue. Any fixed asset of the subsidiary company, any fixed asset of the subsidiary company at the date of acquisition, any fixed asset of the subsidiary company at the date of acquisition should be debited. Should be debited in the fixed asset account. Should be debited in the fixed asset account, which is used. Should be debited in the fixed asset account, which is used to determine. Which is used to determine the cash paid to acquire, which is used to determine the cash paid to acquire new fixed assets. Should be debited in the fixed asset account, which is used to determine the cash paid to acquire, which is debited in the fixed asset. It's debited in the fixed asset account, which is used to determine the cash paid to acquire new fixed assets. Good. Another paragraph. Another paragraph. Any liability, any asset, put it this way, any asset of the subsidiary company, any asset of the subsidiary company at the date of disposal, any asset of the subsidiary company at the date of disposal should be credited. Should be credited in any asset of the subsidiary at the date of disposal should be credited in the respective asset account. Should be credited in the respective asset account. Should be credited in the respective asset account. And continue. And any liability of the subsidiary company, and any liability of the subsidiary company at the date of disposal, and any liability of the subsidiary company at the date of disposal should be debited. And any liability of the subsidiary company at the date of disposal should be debited in the respective liability account. Good. So we have said any asset of the subsidiary company at the date of disposal should be credited in the respective asset account, and any liability of the subsidiary company at the date of disposal should be debited in the respective liability account. Good. So finish. I want to move on. Okay. If you look at this list, there is one thing I've not talked about. If you look at this list, that of the assets at the date of acquisition or disposal, there is one thing I've not talked about. What is it? Somebody identify what is it that I've not talked about? If you look at this list, there is one thing I've not talked about. What do you think it is? Good. Cash. Good. that one, listen, that one, you don't treat it like the others. I want to talk about it now. That's very keen. I added it there specifically. Good. Now listen. Good. That I don't use it in the cash account like I've done in data's account, machinery account, motor vehicle account, creditors account. No. How do we use it? Well, let me start afresh now. Look at this now. Here is 2021, which I did not have a subsidiary. I acquired a subsidiary. So 2022, we have H and S. I've told you we acquired our subsidiary company on 1st July. It came into the group, listen, with a bunch of cash amounting to 2 million. It came into the group. Among other assets, it came into the group with a bunch of cash amounting to 2 million. Now listen. When you acquired this subsidiary company on 1st July, you bought 80% of the shares. You acquired 80% of the shares, and you ended up paying 100 million shillings cash. That's what you paid. To acquire that subsidiary company, you paid 100 million shillings cash. So when you acquired this subsidiary, listen, it's an investment you are doing. A subsidiary is a fixed asset. So in your cash flow statement, where we were doing the format, listen to this now. When we were discussing the format of a cash flow, here, let me take you now, here. Among the financing activities, among the investing activities here, we are acquiring a subsidiary. So somewhere among the fixed assets or among the investing activities, we are acquiring a subsidiary. A subsidiary is an investment. We should come and say purchase of subsidiary. I want you to listen carefully, because you never had this in financial accounting 1. You never had this in financial reporting. No. So when you acquired this subsidiary company on 1st July, I have said you paid 100 million cash. It's true. That's what you invested. But in this cash flow statement, do you bring in 100 million and you say outflow? As much as it's true, you paid 100 million cash. Listen, we now don't bring in that 100 million in the cash flow statement. No. What's the argument now? Let's go back. The argument is this. Where is that? The argument is here now. Listen. Today, on 1st July, I paid you to buy 80% shares in that subsidiary company. I paid them 100 million cash. But among the assets they are coming or giving me, that subsidiary, there is that cash of 2 million. So if today I pay you 100 million, and today you are giving me 2 million, then effectively, listen, I did not therefore pay you 100 million. If today I paid you 100 million, and today you are giving me back 2 million, then effectively I paid you 98 million. So it is this 98 million, listen, which we are calling the net aggregate cash outflow. When you acquired the subsidiary company, it is the net aggregate cash outflow that should go to your cash flow statement. Among the investing activities down there in your cash flow, among your investing activities, we have said you will now come and see your purchase of subsidiary. How much did you pay? It's true you paid 100 million. But what do you bring here? You bring in the net aggregate. Net aggregate. How do you get that net aggregate? Listen, you take what came in, you minus what went out. When we acquired this subsidiary company, it came in with a cash of 2 million. We minus what went out, that 100 million that we paid. So effectively, the net aggregate cash outflow will be that 98 negative. As an outflow mark Q, we come and see a 98 outflow. That's how we use that cash. Among the net assets coming in, listen, where there is a cash and cash equivalent item in that list, then you don't use it the way we have used the other assets. No. Use it to determine what we call the net aggregate. Suppose now we are not acquiring. Suppose we are selling or disposing our subsidiary during the year. When you dispose a subsidiary company, you are paid. You are selling your shares. So you sold your shares on 1st July. You are paid to sell your shares. You are paid 150 million cash. What you received to sell your shares. But now you are the one selling the subsidiary. Among the assets leaving the group now, like stocks, data, machinery, and so on, there is that cash of 5 million. You are selling your subsidiary company. Listen, and we are saying, among the assets leaving the group now, there is that cash of 5 million. When we shall be preparing our cash flow statement, among the investing activities now, we shall come and see a sale of subsidiary. Remember, a subsidiary is an investment. You are selling your investment. As much as it's true, you received 150 million. You don't bring in an inflow of 1 million, 150 million, no. That's what I'm trying to say. Listen, today you sold your subsidiary and you are paid 150. But among the assets you are giving out is cash of 5 million. So effectively, are you paid 150? No. Get again the net aggregate cash inflow. Net aggregate cash inflow. How do you get it? Still, take what came in, you minus what went out. What came in is how much? 150 million. What went out is how much? 5 million cash. So we still take what came in, which is 150, minus what went out, which is 5 million. The aggregate net cash inflow is 145 million. So in your cash flow statement, among the investing activities now, you will take there 145 million. Listen, most students forget this when we are doing a cash flow question. They forget it. They take 150. Some students even forget that 150 is an investing. We are selling a subsidiary. It's an investing activity. So some students forget it at all. Some who remember there is an investing activity, they bring that 150 or they bring the 100 if it was a purchase. I have told you that you don't bring in the actual amount that you either received or paid. I've told you, get the net aggregate, either cash inflow or cash outflow. Get the net aggregate cash inflow or outflow that results on acquisition. Before I put it down as a note, listen. Today, I want to give you a challenge. Today, I acquired a subsidiary company and I paid 120 million. Among the net assets now, listen, among the net assets coming in, now we are acquiring. Among the net assets coming in, there is that cash of 4 million and there is a bank overdraft of 6 million. My question is this. Listen, my question is this. Today, you acquired a subsidiary. You paid 120 million. Among the things coming in as a result of acquiring that subsidiary company is this cash of 4 million and a bank overdraft of 6 million. Tell me, what will you take to your cash flow statement as your net aggregate here representing purchase of subsidiary? Do that calculation. Do that calculation. Today I sold my subsidiary. No, I acquired and I paid 120 million. Among the assets coming in, net assets coming in, there is cash of 4 million and an overdraft of 6 million. What is the net aggregate cash outflow we are acquiring? Somebody's getting 118 million. Today, I acquired a subsidiary. I paid them 120 million to acquire that subsidiary. Among the things that are coming in, there is that cash of 4 million and an overdraft of 6 million. What is the net aggregate? The argument, listen, the argument does not change. Take what came in, you minus what went out. Same argument. Take what came in, you minus what went out. Take what came in, whether it's acquisition or a disposal, it does not matter. The logic remains the same. Take what came in, you minus what went out. The logic does not change. Some people are getting 122, some are getting 118. The argument does not change. Take what came in, you minus what went out. Let's look at it together now. Let's look at it together now. Listen, what came in is cash. Let me put it here, 4 million. What else came in? Plus an overdraft of 6 million. That overdraft is a negative. Don't forget. Then we paid 120 million minus. What is the overall? So I take that 4 plus and a negative 6. I hope you are seeing. Plus and a negative 6 is a negative. Plus and a negative is a negative. Then I minus 120. So this will be 4. Then I say, like items, you put them together, 6, negative 6, and negative 120. It's negative 126. So you end up with negative 122. You end up with negative 122. I hope you are following. The argument does not change. Take what came in. This time, 2 things came in. Add them. It's only that one thing that came in is a negative. So that overdraft is a negative. So I take 4 million, I add the overdraft, but it's a negative, minus what went out. So you will take here 122 negative. Let me give you another one. This time I am selling, not acquiring. Get the point? I am selling. I sold my shares and I sold them for 180 million. 180 million. Among the things that left, now leaving, not coming in, leaving. Among the things leaving the group is this cash of 8 million and an overdraft of 5 million. So when I'll be writing here, sale of subsidiary, I'll put in how much? I've told you, listen, I sold my subsidiary and I was paid 180 million. Among the things I gave out was cash of 5 million and an overdraft of 5 million. What is the net aggregate cash inflow? Fanya your calculation. What? Give me that amount. I'm waiting. I sold my subsidiary. I was paid 180. Among the things I'm selling or I'm giving out is cash of 8 million and an overdraft of 5 million. What is the net aggregate cash inflow? Okay. The argument does not change. Take what came in, you minus what went out. Why are we getting different answers? And yet I've already explained. Take what came in, you minus what went out. Take what came in, you minus what went out. I'm seeing different answers. Somebody else, 2 people have the same answer. 3 people have the same answer now. Why? A third answer has come in. A third answer has come in. So there are 3 different answers. Wow. There are 3 different answers now. Okay, let's see. Let's see. We are selling. Take what came in, 180. Minus what left, -8. Cash left. Then you also minus whatever else left. This time it's an overdraft. It's a negative. So complete. This is 180 minus 8. Negative and a negative. Negative and a negative is a positive. So that comes to be +5. So this will be +180 and +5. That will be 185. Minus 8. That looks like 177. So that's what came in. 177. Most students got it. Most of you got it. Sawa. Good. So that's how we use the cash and cash equivalent at the date of acquisition or at the date of disposal. We received 180, that's correct, but we gave out 8 million in cash and they were going to pay they are going to pay 5 million on our behalf. No. Forget about what they will do with it. They are taking it. We are giving it out. We are giving out 2 things. We are giving cash and an overdraft. We are giving it out. So it's true they are the ones going to pay for it, but don't look at it from that point. Just count you are giving it out. It's leaving. But you had to remember, anything leaving you minus. But you also have to remember, this thing that I'm minusing is already a negative. It's an overdraft. Okay? It's already an overdraft. So that's why we are saying, I take the 180 that came in, I minus the cash that went out. It's our cash as an asset, I minus. I am subtracting what went out. I minus also because another thing left, which is an overdraft, but an overdraft we have already agreed is a negative. Okay? So when I open that bracket, it will be 180 minus 8, negative and a negative, that turns out to be positive. That turns out to be positive. Okay? Good. So then you come and now solve the equation. Once you understand the logic, take what came in, you minus what went out. Once you do that, that's okay. When it is an overdraft, just remember it's a negative. The other time it was coming in, I added it here. But it came in as a negative, so I have to put it in bracket as a negative. Okay? That's what I did here. So, but when I was trying to open the bracket, I realized it's a negative. So a positive and a negative became a negative, effectively. Here, when I'm trying to open a bracket, I realize a negative and a negative becomes a positive. Good. Sour. Good. So that's how, listen, that's how we deal with the cash of the subsidiary. So have another subheading, acquisition and disposal. As a subheading, acquisition and disposal of subsidiaries. Acquisition and disposal of subsidiaries with an apostrophe, subsidiaries cash. Acquisition and disposal of subsidiaries cash. Acquisition and disposal of subsidiaries cash. Then you say this. Then you say this. The net aggregate cash inflow or outflow, the net aggregate cash inflow or outflow, the net aggregate cash inflow or outflow arising from the acquisition or disposal, the net aggregate cash inflow or outflow arising from the acquisition or disposal of a subsidiary company, arising from acquisition or disposal of a subsidiary company should be shown as a separate item. Should be shown as a separate item in the cash flow statement. Should be shown as a separate item in the cash flow statement among the investing activity items. Among the investing activity items. I've said the net aggregate cash inflow or outflow arising from the acquisition or disposal of a subsidiary company should be shown as a separate item in the cash flow statement among the investing activities. Among the investing activities. Among the investing activities. Among the investing activities. Good. That is the one we are showing here. We are showing here among the investing here. Either you will have an item called purchase of subsidiary, or you will have an item called sale of subsidiary. That's the one I'm saying should be shown separately in the cash flow statement among the investing activity items. Among the investing activity items. Good. Sawa. Now listen. So in principle, listen to this now. In principle, we are through with our discussion of how to prepare a cash flow statement for the group and for the individual companies. Ideally, we are through. Okay, listen to this. When we started the topic, we started by looking at the general format of a cash flow statement for an individual company. For an individual company. You remember we looked at the direct and the indirect method, how to classify the operating, how to get the investing, how to get the financing. All that discussion we did. Okay? Then when we discussed the general format of an individual cash flow, an individual company, for the cash flow, we went further and now brought in the aspects of the group. Okay? When it came to the aspects of the group, we said there are 3 areas the examiner will test you when it comes to group cash flow. On top of what you know from financial accounting and from financial reporting topic of cash flow, on top of that, these are the areas we have added. How do we deal with associates? How do you deal with non-controlling interest? And how do you deal with acquisition and disposal of subsidiary? That's what we have done. So last time we discussed how to deal with an associate. When you as a group, you have an associate and you are now being required to prepare a cash flow statement, we said, how does it affect your group? I do hope you remember, we said when you have an associate, as far as cash flow is concerned, you determine an amount called what? We said you determine an amount called cash dividend received. Cash dividend received from the associate. Okay? Once you receive that amount called cash dividend received from the associate, we said you take it to the cash flow statement as an investing activity. I do hope you remember. Just to remind you. Then we asked ourselves, how do you get that amount called cash dividend received from the associate? You can see here, we said to determine the cash dividend received from the associate, we said you prepare an account called investment in associate, where we said you feed in all the information concerning your associate. From the question, whatever the question will give you as information concerning the associate, then you get the balancing figure, and the balancing figure there is what we called the cash dividend received from the associate. Good. Of course, there are those other details we discussed, which we may not now go through them now. After we discussed the associate, we also came and discussed how do you deal with non-controlling interest. Here it is. How do you deal with non-controlling interest in the cash flow statement? You remember, we said non-controlling interest come in because you don't control 100%. You control 80% or 70%, yet the other 30% is owned by outsiders whom we call non-controlling interest. Their effect or their interest in the group, as far as cash flow is concerned, how do you account for their interest? the 30% shareholders. We said the relationship between the group and the non-controlling shareholders. As far as cash flow is concerned, I hope you remember, we said you calculate what we were calling the cash dividends paid to the non-controlling shareholders. And when we prepared that account, you can see it here, we said whatever you will get as a balancing figure in that account, that balancing figure will represent the cash dividends paid to the non-controlling shareholders. That cash dividend, we said, you now take it to the cash flow statement as a financing activities. Those non-controlling shareholders are part of financials. Whatever dividends you pay to them, we said you take it to cash flow as part of financing. We discussed that in details. I'm only reminding you the key issues. Good. How to calculate it, you remember. Today, we have discussed acquisition and disposal of subsidiary, and we have looked at the effect of acquiring a subsidiary company during the year, because it will come into the group with its own bunch of net assets. How do you use them? We have said use them in the respective accounts, whether it's acquisition question or a disposal question. When it's acquisition, if it's an asset coming in, debit it in the asset account. If it's a liability coming in, credit it in the liability account, whichever the respective liability. We have said if it's a question of disposal and we are disposing a subsidiary and there is an asset leaving the group, then that asset, we have said, should be credited in the respective asset account. That's what we have said. If it's a liability, we have said it should be debited in the respective liability account. Then when we came to the end, I talked about how to deal with cash and cash equivalent. That's an area I have emphasized, that when you are acquiring a subsidiary, you have to show in the cash flow statement the purchase of subsidiary as an investing activity. But whatever you paid is not what goes to the cash flow. No, it is the net aggregate cash outflow. If you are selling a subsidiary, you are paid. Is it what you take to the cash flow statement? No. I have said it is the net aggregate cash inflow that came in that goes to. We have discussed how to do it. Good. I have no time to start and complete a question. That's what we shall do next time. So next time, in our next lesson, we shall now do a question from your past papers, because now you have an idea of almost everything that you need to know concerning cash flow. Except we shall add one or two other points before we do a question. We shall just remind you one or two other areas before we do a question. Good. So for now, maybe we can stop there, because there's somebody who said they have another class at 8 somewhere else. So we can stop there so that we give that person or those people a small break so that they can prepare for their next class, which starts at 8, because they said they are starting their classes at 8. Good. Now, for the new students who could be here, let me now talk to you. For the new students who could be here and you wish to continue with our classes, listen, then this is the timing for financial reporting, advanced financial reporting. I'm talking to the new students now. We have either early morning classes or we have evening classes. Our early morning classes normally starts from 5:30 in the morning to 7 a.m. in the morning. Every Monday, Wednesday, and Friday. Those are the days for early morning classes. For the evening classes, our classes normally starts from 8 p.m. to 10 p.m. It's only that today we had an extra class, but normally it's from 8 to 10 every Monday, Wednesday, and Saturday. Okay? Those are the timings. If you feel you are not available at any of those times, then you can still buy what we call pre-recorded videos. you can buy what we call pre-recorded videos, where you can watch the videos at your own free time, at your own pace. For those who join the normal classes, that is either early morning or evening, I'll give you the videos of the previous classes that you have missed. That one, there's no problem. You will get the videos of the previous classes. You will get the videos of the previous classes. Good. Now, our system is such a way that, I'm talking to the new students now, our system is such a way that in case you miss a class, maybe you are an evening student and on Saturday you have a function and you want to attend the function, does it mean that you will miss that class? The answer is no. You can still go back to the group where the link was posted and you click on the link and you'll be able to watch your video at your own free time, So that's another feature one should know, that in case you miss a class, you can still watch the video of the class that you missed by going back to the group and clicking the video or the link of the video that you have missed. That is it. Now, we are charging 4,000 shillings. But we also accept payments in installments. If you are interested, then you can call me on this number, 0722 65 8875. If you are interested, you can call me on that number, 0722 65 8875. We can talk on how you get the videos of the previous class. If you are buying pre-recorded videos, fine, good. Now, for some of you, you may have friends who are doing financial reporting of the intermediate or what used to be called Section 3. If you have some friends who are doing it, you can still recommend them. We are still teaching that subject. The classes are every Tuesday, Thursday, and Friday. Same 4,000. They can still get the videos of the previous class. The modalities are the same. Okay? For those who are doing financial accounting, if you have friends who are doing financial accounting and they are here for the foundation level, that is for the foundation or what used to be called Section 1, or for ATD1 and ATD2, we still have the class. We still are teaching that class. Good. So before I leave, I would still ask you again, please subscribe to my YouTube channel. If you have not subscribed, please subscribe so that you may be notified anytime you will send new videos to the YouTube. Subscribe, and you can also click that notification bell so that you can be notified whenever we post new videos into the group. Of course, the channel is called CPA Joseph Njuguna. That's the name of the YouTube channel, CPA Joseph Njuguna. But if you're watching now, you are watching through YouTube, you can click down there and subscribe. Good. So let's stop there. Thank you. Let's stop there. We meet next time. For those who are meeting, for the new students, of course, if you want to continue with us, we have told you there is an early morning class or evening class. Early morning, 5:30 to 7, evening, 8 to 10 p.m. every Monday, Wednesday, and Saturday. Early morning, Monday, Wednesday, and Friday. I've also told you, in case you miss a class, don't panic. You can still watch your video at your own free time. Okay? Then I've also told you, we shall give you the videos of your previous classes. Then you can also buy what we are calling pre-recorded videos if you feel you want to listen to them at your own pace. Good. We are charging 4,000 shillings for the whole semester. We also accept payments in installments. Good. Then I've said, you can call me on that number, 0722 65 8875. Then for those friends who you have who are doing financial reporting intermediate, tell them we are doing it. Financial accounting also. Finally, please subscribe to my YouTube channel. Otherwise, have a good night. See you next time. Have a good night. Unless there is somebody with a comment, maybe like a new student who want to ask a question or he has a comment. Any new student who want to ask a question or he has a comment. Okay. Maybe if there's none, then we can say good night. See you next time. Bye for now. Bye for now. Good night. See you. Bye.